Well, what a finish to the week we had in the US. After 4 days of sustained pressure across the market, and in particular focused on those Magnificent Seven tech stocks, we saw pressure released on Friday night. And the reason was very clear. Jerome Powell spoke at the meeting of global central bankers at Jackson Hole in Wyoming. And in doing so, many investors felt that he reaffirmed that the Fed maintains an accommodative stance. That is, that interest rates in the US are above neutral and that the Fed is looking for an opportunity to adjust interest rates downward to meet a more neutral condition. And that dovish talk from the chair of the US Federal Reserve saw investors pile into the share market. The S&P 500 was up 1.5%, reversing all of the losses it had made over the previous 5 trading sessions. And the Nasdaq was up 1.9%. Recapturing lost ground in a similar manner. So the message really reversed a week of losses for the market. And while we were captivated by the earnings reports that we saw last week, it's an important reminder that the events of Friday night, the macro events, also drive markets. And while once again this week the focus will likely be on those earnings reports coming out, and we have got some very important earnings reports coming out, including in the US from Nvidia, CrowdStrike, Dell and Snowflake. And these important reports come out despite the fact that we're more than 90% of the way through the US reporting season. But here in Australia, we'll get into full swing. We'll hear from Wesfarmers, Fortescue, Woolworths, Coles, and a host of others over the course of this week. And in Hong Kong, we've got Alibaba, PDD, Meituan, CITIC and Li Auto all reporting, amongst many others as well. So a big week for investors and analysts. There could be substantial swings. And as we've seen all around the globe over the last couple of weeks, reactions to reports, whether they're good or bad, can be very severe. Or they can also boost stocks enormously. We saw a number of stocks last week up by more than 20% in response to their reports. We saw some stocks down by more than 40%. Hello, James Hardy. After their results announcements. So results announcements remain very important to individual stocks and for that reason to portfolios. But it was the macro that really drove the action on Friday night and reversed the previous weakness. And it's important to understand these macro drivers in the market. With inflation and employment both at reasonable levels, according to the Fed chair, there's no pressure on them to move. But the Fed is looking ahead and it sees softer employment data and tame inflation. And in that scenario, it has room and motivation to lower interest rates again. And that's what the market focused on. Now, that means that inflation reads and employment reads will become even more important to the share market performance going forward. And on Friday, we have the most important inflation read. In the US, there are many measures of inflation. The CPI, we're all very familiar with. The Consumer Price Index is a headline measure of inflation. But we know that the US Federal Reserve focuses on one component of the national accounts, and that is the PCE, the personal consumption expenditure. And that PCE reading is the inflation read that most informs the Fed's action on interest rates. And this Friday, before the market, we'll hear the latest read on the PCE. And at the yearly level, the headline read is expected to stay steady at 2.6%. And the core read steady at 2.8%. Now, if that's the case, we're likely to see benign trading conditions, but a read either higher or lower than those expectations could have an immediate impact on share trading. If it comes in weaker than expected, if inflation is not as high as analysts are predicting, that will lead to further expectations of interest rate decreases. And that, of course, could boost the share market on Friday night. If, on the other hand, we see those readings come in above expectations, that is for the headline 2.6% and for the core 2.8%, anything above that will suggest an upward trend in inflation, and that's that's very likely to see the Fed sit on its hands when it comes to interest rates. So this inflation reading on Friday night will see the focus once again over the course of the week. We're likely to be looking at individual results, but come Friday night again, it's a return to the macro and a potential game-changing read on inflation, something to look out for. But coming back to the results this week, we have Drone Shield out this week. Now, Drone Shield remains one of the most highly traded stocks on the Moomoo Australia platform. It's been up by 400% this year, but last week fell 12%. So that volatility is continuing, and the Wednesday report will be very important. Now, the Drone Shield have previously reported they have a robust pipeline of product demand, and product demand is up. And so we're looking for a solid result to justify the elevated share price levels that we've seen in the market and trading so far this year in Drone Shield. Another one that will get a lot of focus from Moomoo Australia clients is the Nvidia result, which is due out Thursday morning, our time on the east coast of Australia. That is towards the end of the US trading session. It's been put out by our analysts that it will be a crucial test for the scorching AI trade. And as we're all aware, or those who are active in the market are aware, artificial intelligence plays have been a focus over the last quarter, and this result will speak directly to those high levels of action that we're seeing in IA-related stocks. It's also been flagged that Nvidia, before its results announcement, will announce a new robotics product, and that might come as early as tonight, our time. If they do have an expanded product range ahead of their result, that it could also be a game changer for their share price. And returning to the local market and looking at CSL after its result last week was absolutely trashed, dropping down from around 280 Australian dollars a share to closer to 200 a share. Its trading since has been very volatile. That drop in its share price value has seen it drop from the third most valuable stock on the Australian share market to the eighth in just 1 week. But sentiment around the stock remains bullish, and the long-term prospects for the CSL business do seem to be better than the current share price is reflecting. There is a capital initiative coming and a potential spin-off of their virus businesses, and that was not perceived well when it was announced last week. It's also possible that analysts might rethink that move, and a number have moved to a buy rating, reflecting the fact that the share price has fallen so much. So CSL certainly one on the radar. If an Australian investor isn't holding CSL, the big fall that we've seen in the share price might be the opportunity to test and check whether or not CSL should be in your portfolio.